Good evening. Ira Epstein with your metal market wrap-up. And this wrap-up is for Tuesday, and we're here now on October 11th, 2022, just getting on to 6 p.m. Central Time. Sorry for not being here yesterday. It was Indigenous Day. Now, I'm used to Columbus Day, but I'm an old guy. What do I know? And we don't even have a Columbus statue in Chicago. Our mayor hid it. She promised to have it out for Columbus Day, but she lied as usual. All right. So as we look at what's going on, tomorrow's a big day. We get the PI number, but then the big number behind that one is going to be the CPI number, and that'll be it for a while. You know, we'll see the unemployment claims and the usual. We also get tomorrow the FOMC minutes. So there's a lot of things that traders are going to focus on. Going into the report, the question is which way. The market had a very big attempt at a short covering rally, and it fizzled in the last hour and a half or so of trading today. It tried and the stock market couldn't hold it. We're coming back down in all the metals at this point. Probably the idea that higher interest rates coming, what's it going to do to the market? Copper market has to make a decision. What's it going to say in front of the party Congress that begins Saturday? I believe Bloomberg's going to cover it, the whole event. But I don't know what it means. To me, here's how I'm looking at it. You're not going to get big statements coming out of it. So far, the press wants us to think that there'll be no change in the COVID policy in China, that there's going to be 7 people chosen for different cabinet positions. And obviously, the importance there is the age group, hardliners, more open-minded. What are they going to do? And of course, there's President Xi. For us, we're all going to be studying one thing: inflation, inflation, inflation. Is it getting worse? So far, the reports are that it is. I see hunkering down. Today, the New York Fed issued a survey that it had just taken. It's ugly. People are predicting a lot more inflation, and they are not buying. They are cutting back on things. So something you got to think about for that. When we take a look at the gold market, obviously, interest rates and the strong dollar are not the friend of the gold market. You're still very much in a bearish phase. As long as you stay under the 18-week average, I maintain a bearish bias. We've had a nice rally back into the highs up here. It's impressive. If the market were to come here and take out these highs, traders would immediately say that this is a head, a shoulder, and a shoulder inverted, where you pick the head up and you flip it over, and they would start saying you're going to 18 and a quarter. I know you think I'm crazy. I'm not. That would be that formation that they'd look at. I'm not saying it's going to happen. I'm saying it was a bounce in a down market. It rallied up, and it's gone back into a downtrend. The market has come down again into the 18-day average of closes, where the battle for direction is now being fought. Where's the next leg? Are you going back through these highs to get up into that area? And notice how 1836, not too far away from the number I just gave you. And if it drops down from here, the lower Bollinger Band becomes another key number of 1628.50. This is the big test for this market. As of this moment, the bears are in control. Lower highs, lower lows, a downtrend. The bias is down as you're under the 18-day average, and momentum is still pointing to the downside. However, the risk in going short is substantial. If one were to sell short at 1681, do you really want to put a stop over the most recent high of 1734.20? $50 risk almost? I'll let somebody else have that. Silver is losing to the gold market again. In fact, I saw this for those of you that get my ETF subscriber video. Today was the day that we were hitting the silver market on short sales. Don't know if they'll work. Went home okay. And as you can see on the futures, still looking down. The resistance now on the way back up would be the 18 and the 100-day average. For a bit here, the market did as I had told you. When the market cleared, and I want to take you right to this. It's fairly important to sometimes learn from these patterns. Here is the market rallying right into the 100-day and the Bollinger Band. That's normally a resistance zone. If you're going to exceed it, then you're going to wherever the 200-day comes in, and that's 2218 and a half. Let me get back to where we're at. Here we are. The market goes up one more day. Now, this is an upside breakout. So until you take out the most recent low in this market that it just came from, breaks, even the ones that I'm talking about, may be short-lived. Got to be careful here, and I'm aware of that. You fought the battle between the 100-day and the 18-day average of closes, and all of a sudden you started stalling out on Friday. Yesterday you came down like this. I wasn't here. I was out celebrating with all my Indian friends and the indigenous people. I'm, of course, trying to be humorous, so don't get mad at me. I guess, well, what can you say? That was the day. I was looking for the Columbus Day Parade. We had one in Chicago, but you can't call it that. Lower highs, lower lows coming down through the 1796 area. Maybe. It's a tough trade. I like the short side of the market still until that number's taken out. In the copper market, battlegrounds right at the 18-day average of closes. Could the market be more neutral here? Well, it has the higher lows, higher highs, but momentum is flat, and you're just sort of laying down on that number. Whenever I see that, I know what it's waiting for. It's probably saying, I want to see if the producer price index is going to be hot, and then the CPI, and then if they are, the Fed's going to hunker down even more, raise interest rates worse. Why? Everything that uses copper, the demand's going to be cut a bit. Remember, whatever the Fed does, other central banks look at. They don't want to follow the Fed. I know that. Many countries are saying, we want to come to the end of this. We're not in the same situation. But when we go up 75 basis points, the pull on their economy is unbelievable. That's the problem. When you take a look at the platinum, you're out of your uptrend. That actually ended yesterday. As I take you into this, let's see, right here. See how you took out that low? That was yesterday. So you end the swing to the upside. It also ended against the 200-day average in the upper Bollinger Band, and now you're back into support at the 100-day average in the 18. I have no idea what to do with the chart like that. The palladium is flip-flopped back into the bear side with the lower highs, lower lows. So until it gets back over here, 2310, the odds favor a potential test right now of 2054 to 2041, the Bollinger Band, the 18-day average. Momentum is turning down as well. The dollar had an outside day up today. So until today's low is taken out of 112.29.5, the odds favor that the market will go up a couple of more days. Obviously, I think trying to get up to the upper Bollinger Band here before all is said and done at the 114.64 level. But if you take out today's low, a guy like me would walk away from the market and just say, not quite certain what we have now. That's not the place I want to be at this point in time. So you put it together, you're trying to come up with game plans, and that's what we do. We try to work with you and help you with things. Now, if you don't know all the terms I talk about, you're new to my station. We have people that come here every single night. We have our Guide to Technical Indicators, volumes 1 and 2, put together with our good friends from Futures Magazine, and it gives you the definitions with multiple examples of everything. It's a phenomenal way to get yourself familiar with what I'm talking about, others are talking about here. And it's not just a little. You get quite a bit in this. And as I said, you're able to print it out if you want. We'll send it to you as part of a link and just print it out and you can keep it for yourself and away you go with it. How do you get it? Go to our website under free offers or just follow my finger up here. Just take your cursor. You'll see an icon show. When you see it, just give it a click. Should be an interesting morning. I can't wait to get the PPI number. You take care.